Welcome back to the deep dive. Today, we're really digging into a major shakeup in the crypto world. I'm talking about Coinbase.
Yeah, the huge exchange buying up this early stage investing platform called Echo.
That's right. And it's a big deal financially, too. What was the number? $375 million in cash and equity.
Exactly. $375 million. But, it's more than just the money. This really gets to the heart of, like, who gets to make money in crypto these days? Is Coinbase actually handing its users, millions of them, a kind of golden ticket to early deals? Or are they just maybe creating a new kind of bottleneck? More crowding, more risk.
Yeah, that's exactly what we're trying to figure out in this deep dive. We've looked at the sources, and the big claim is democratization.
Hmm.
See, Echo is interesting because it lets regular investors, maybe like you listening, get into these really early stage crypto ventures. Stuff that honestly used to be totally locked up. Only VCs, institutions, the super wealthy could play.
Right, the old boys club kind of thing?
Yeah.
Pretty much. And this whole thing isn't happening in, like, a quiet market either. The timing is important. Investors have chucked, over $21.8 billion into crypto projects just this year.
Wow. $21.8 billion.
Yeah, it's the highest amount going into the sector since back in 2022.
Mm-hmm.
So this Coinbase acquisition, it's like pouring fuel on an already burning fire. It validates that hunger for early access.
Okay. So let's unpack Echo itself and why Coinbase dropped $375 million on it. What's the magic here? The sources say Echo's all about community access. It lets communities invest a, quote, ranged amount at cheap prices. There's this quote from an angel investor, Casper Van de Leeuw. He said the whole point, the ethos, was making these Echo investment rounds cheaper for the community. So you can get in early, maybe put in a smaller amount without needing, millions in the bank or insider connections.
Exactly. And that's the core of this democratization argument. There's a researcher, Mir Hajian, who put it nicely. He said, Echo basically flips the traditional model. Instead of insiders, like VCs, controlling who gets in, Echo is about empowering communities.
Empowering communities. Okay.
And then you plug that into Coinbase.
Yeah.
Think about it. Coinbase's huge user base, their platform, their brand name, it's potentially a massive synergy.
Yeah, I can see that. And for Coinbase, it's definitely not just about being nice, right?
Yeah.
Hodgin called it a major win for users, sure. But think about the incentive for Coinbase itself. They've got over 100 million users. If you're a hot new crypto project, where do you want to launch?
Right. Launching within the Coinbase ecosystem suddenly looks incredibly attractive. It's almost like a built-in audience of millions.
A huge gravitational pull.
Definitely. And zooming out, the sources we looked at, they suggest this trend, this investor appetite. It's probably only going to grow. There's talk about shifting sentiment, especially from the U.S. government. More pro-crypto policies seem to be emerging.
Interesting. Regulatory shifts often pave the way.
Yeah, and that just adds to the expectation that, the money will keep flowing into these kinds of early stage deals.
Okay, but now we need to talk about the other side of the coin, early stage investing. It's the definition of high risk, high reward, isn't it?
Absolutely critical point. Let's start with the reward because, it can be genuinely insane. There's this example from the sources. People who invested in Bitfinex's Plasma blockchain project on Echo last year, when its token, XPL, launched in September, they apparently saw a 324-fold return.
324x. Wow. Okay, that's life-changing money.
It absolutely is. And that's the lure, right? That's what pulls people in.
Hang on. That kind of insane return only happens because the risk is equally, insane, right? If Coinbase is bringing this democratized access to its 100 million users, aren't they potentially exposing everyday people to catastrophic losses? How do the sources square that circle?
They square it with, let's call it brutal honesty, which is actually refreshing. The founder of Echo, Jordan Fish, he didn't mince words. He said, and I quote, seed stage stuff is really difficult to invest in. And then he adds this crucial part, something everyone needs to hear. Lots of projects on Echo will go to zero.
Go to zero.
Yeah. He followed up with, in fact, I would imagine that most things on Echo will go to zero.
Wow. Okay. So transparency is key, but that's a stark warning. Most will fail. And it makes you think, this isn't the first time retail investors got a shot at early access, is it? There's history here.
Exactly right. This immediately brings back memories, echoes, you could say, of the 2017 initial coin offering boom. The ICO craze.
Oh, yeah, the ICO boom. Wild West days.
Totally. ICOs were basically a way for projects to raise money by selling digital tokens directly to the public, often completely bypassing, any real regulatory checks. They sold tokens, not equity, to try and skirt the rules.
And we all remember how that ended, or maybe some listeners don't. What happened?
Well, it was chaos. That lack of oversight meant hundreds of, frankly, dubious projects popped up. Lots of scams, lots of failures. And eventually, the regulators, specifically the SEC in the U.S., came down hard. Crackdown city.
Right. The SEC basically shut it down.
They essentially did, yeah. They argued most of these tokens were unregistered securities, sold illegally without proper investor protections. That whole episode basically slammed the door on public token sales for years, and it left this big gap, this need for funding that wasn't just venture capital.
Okay, so if the ICO model crashed and burned due to scams and regulation, what's different now? Why is Coinbase buying Echo now?
Well, the industry still needed alternatives. There's this quote from Matt O'Connor, co-founder of another platform called Legion. He talked about the need for alternatives to VC-dominated launches that treat retail as exit liquidity.
Exit liquidity, that's a key phrase, meaning the public just buys in when the early investors want to cash out.
Pretty much. The goal, or the stated goal anyway, is to get the community involved early, genuinely involved, but do it in a way that's compliant, a way that doesn't just set up the public to be, the bag holders.
But hold on, if the goal is avoiding retail becoming exit liquidity, how does bringing in 100 million potential buyers via Coinbase change that? Doesn't that just create a much, much bigger pool of potential exit liquidity? It feels like swapping VC gatekeepers for exchange gatekeepers.
That's the core tension, absolutely. It's a really valid point. But the key difference now, according to the sources, is the regulatory environment. It's shifted. They specifically point to clearer rules emerging, like MiCA in Europe. That's the Markets and Crypto Assets Regulation.
Right, Micah. That's been a big development.
Huge. And combined with that shifting sentiment in the U.S. we mentioned earlier, together, these things have, quote, created space for compliant public token sales again.
Yeah.
It's this new regulatory foundation, or at least the perception of one, that makes a deal like Coinbase buying Echo seem feasible today, unlike in, say, 2018.
Got it. So compliance is the magic word this time around. Let's look at what Coinbase actually bought then. It's not just one platform, is it?
Correct. Echo is kind of a two-part thing. There's the early-stage investing infrastructure we've mostly talked about, but they also have a specific platform for launching tokens called Sonar. Now, Sonar feels a bit more like the old ICO model, conceptually, but crucially, it's designed with modern compliance baked in from the start, or so they claim.
Okay. Sonar for token launches, Echo for early equity-like stakes. What are Coinbase's plans? They didn't spend $375 million just to let it sit there.
No way. The plan, apparently, is to integrate Sonar first, get that token launch capability hooked into the Coinbase machine, but longer term. The vision seems much bigger. They're talking about expanding support for things like tokenized securities.
Tokenized securities, like putting stocks on the blockchain.
Sort of, yeah. Or bonds, or other traditional financial assets. And also real-world assets, RWAs. That's things like, fractional ownership of real estate or art or commodities, all represented by tokens on a blockchain, accessible through Echo's infrastructure.
Ah, RWAs, that's a huge buzzword area right now. So that tells you where Coinbase sees the future growth. Though, interestingly, the founder, Jordan Fish, said Echo will stay standalone, keep its brand, for now at least.
For now, yeah. But the plumbing, the infrastructure underneath,
Yeah.
that's clearly being geared up for massive scale, likely with an eye on fitting into future regulations.
Okay, scaling up. Which brings us neatly to the potential downside, right? The competition aspect.
The downside of democracy, you could say, or at least this version of it, allocation competition.
Yeah, it's basic economics. If there's a really hot deal everyone wants in, and if you suddenly open the door to potentially 100 million Coinbase users, well, that's not a door, that's floodgates.
Exactly. Hajian, the researcher we mentioned, even though he's broadly positive about the deal, he was very clear about the immediate effect. Competition for allocations will intensify.
Intensify feels like an understatement.
Probably. Think about it. The best deals on Echo are likely already competitive. Now imagine adding a massive pool of new potential investors. It creates this irony, right? You democratize access by bringing in Coinbase's reach. But that very act makes it much, much harder for any single individual to actually get a meaningful slice of the best opportunities.
The pie gets bigger, maybe, but the slices get way thinner, especially the tastiest slices.
Precisely. It's the crowded trade problem on steroids.
And you can already see people positioning for this. That other source, Vandeluke, he's predicting more projects building on Coinbase's own blockchain base will launch on Echo now. And he's even hoping for a base airdrop out of all this. That kind of speculation shows you just how crowded and competitive the thinking already is.
So wrapping this all up, if we boil down this deep dive for you, the listener, there's this central tension. On one hand, yeah, this deal's a massive validation for early-stage crypto. It holds out the promise of democratization, finally maybe access for the little guy. But, and it's a big but, bringing Coinbase's huge user base into the mix virtually guarantees that getting into the really promising projects, that's going to become way, way harder. It's democratization meets hyper-competition.
Absolutely. And it leaves us with a really critical question going forward. If this $375 million deal does signal a return to public token sales, but this time, compliant and regulated, how does the industry actually balance that? How do you keep the supposed community spirit, the low entry prices, the small investor focus when you've got the overwhelming demand that a platform like Coinbase inevitably brings?
Mm.
And maybe even more fundamentally, what does a truly compliant community offering even look like in this new world? Especially if the real aim is to genuinely avoid using retail investors as just exit liquidity when things get frothy again. That's the tightrope, isn't it? Balancing access, compliance, demand, and, well, fairness. A very tricky balancing act that the industry is navigating right now.
And one will definitely keep watching.